Right. See the mouse moving? Yeah. 226. So what I'm going to explain today is how to think in the market's perspective. How I approach the markets when looking to enter a trade, and how I approach the market to enter this current trade. When I'm looking for my confluences, the thought process that I have towards it is, okay, the more confluences I have, the higher the probability of price pushing up in my favor from this area. And the key word is area. All my confluences come together to increase the probabilities of price pushing up from this area, not from my entry point, from the area, okay? And you can see how price came back as soon as I entered. I entered after a morning star, and if you didn't have that perspective and thought process of, okay, I'm entering from this high probability area of price pushing up, and you were stuck thinking, okay, morning star, price should push up straight away now from my entry point because of that. No. That morning star just increases the probabilities of price pushing up from this, as you can see, I've highlighted it, from this overall area, okay? So when we're looking for our confluences, I'm thinking, right, morning star, increased probability number one of price pushing up from this area, because we've seen previously people's behavior, they tend to repeat the same stuff, and the same stuff, I mean same actions. Okay, so there's one thing that's increasing the probabilities of price pushing up from this area. Then we see the EMA has just been rejected. There's another thing that we know can lead to a potential push up, as you've previously seen, morning star, push up, and that's exactly what we want to happen here. But there's just another thing. So now we have two things increasing the probability of price pushing up from our area. The third thing which I saw that increases the probability of price pushing up from this area is previous structure point. Price was retesting previous structure point, which increases the probability of people stepping into the market and placing buy orders as well at this area. Then we have the trends. The trends are bullish. The 4 hour and the daily is bullish. The weekly might even be bullish, I can't remember. Yeah, the weekly's bullish, the daily's bullish, the 4 hour is bullish. So we, on the 4 hour time frame alone, we have one confluence, morning star, two confluence, EMA, three confluence, previous structure, and four confluence of the trend being bullish. I know it says lower low, lower high, but it's supposed to say higher low, higher high. So there's multiple confluences that come together to increase the probability of price pushing up from this area on the 4 hour. And you want to take that same approach on the daily. Okay, so once this loads, okay, here we go. So what do we have on the daily that is increasing the probabilities of price pushing up from this area? One, we're bullish. Two, we've pulled back to an area of interest, which from previous price action, we can see price has respected and buyers and sellers have stepped in the market or in this area. So we know that we're in an area where previously a large amount of buyers and sellers have stepped in the market. So we can take that information and use that to our advantage. We have 1, the trend, increasing our probabilities of price pushing up. 2, an area of interest, increasing the probabilities of buyers stepping increasing the probability of a large amount of traders stepping into the market. Whether that large amount is in the bullish direction or bearish direction, we don't know. But we know that this area has an increased probability of seeing a large amount of buyers or sellers. So what else can we see to give us further confirmation of a large amount of buyers stepping into this market at this area? Well, we have a morning star formation, beautiful bullish engulfing. As you can see, price came down, sort of a small candle doji looking like, and then a bullish engulfing. So now we have the trend, we have the area of interest, and we have a candlestick pattern. So we have 3 confluences increasing the probabilities of the daily time frame pushing up from this area. Mixing that as well with all the 4-hour confluences we have, increasing the probabilities of price pushing up from where? This overall area. And that's when we use our lower time frames to understand if price is going to play out to these probabilities. Where can we place our entry and our stop loss? So using the 4-hour, we understand if price is going to abide by structure. We have higher high, higher low, higher high, higher low. Okay, so this is where we're looking to have our higher low for price to then push up and create the higher high. And then I'm not going to go into detail about the entry signal I'll use and how I'll identify, but you get the gist of what I'm saying, of how you need to think and how your thoughts need to be when you're looking at the market. All right, because the trade, you can see obviously now it's pulling back. The market might pull back, stop me out, but that's okay, because I know I had an increased probability of price pushing up from this area. I didn't have a guarantee of price pushing up from this area, but you take enough of these trades with the increased probability, you're going to take profit more than you're going to hit stop loss. Okay? So that's how you want to approach the market when you're looking to enter a trade, and how your thoughts need to be, because you've got to understand that it's other traders that are going to make you money. Okay, you're not going to make yourself money. You're going to execute to put yourself in a position where other traders can make you money, and that's all we're trying to do. See, some of you might be fretting right now, seeing how this candle is pulling back so much. Oh my gosh, it's pulling back. Yeah, but the candle has 3 hours and 25 minutes to close. For all we know, this is going to push back up and close as a new higher high. Or it could come all the way back down, stop me out. Or it could do whatever it fucking wants to do. I have no expectation for this trade. I have no expectation for this current candlestick. I saw my setup and my edge in the market, so I took it, and then I carried on with my day. It's as simple as that. You turn up each day, look for your strategy. If it's there, you place the trade, move on. If it's not, you move on. It's simple as that. Right, this is just a touch up on the video I was waffling about, how to think about the markets. The trade played out in my favour, hit my take profit for a 1 to 3. Price is still pushing up like crazy. Cheeky little extra 2R, we'll see. But again, right, back to how your thoughts need to be when approaching the market in situations like this. I don't think of this as me missing out on money. A lot of people would, and Be like, oh no, I closed here when I could have been holding right now and been up an extra 2% if I risked 1%. I'm looking at this like, granted, I would like to have more money and like to be in the trade still, but I can use this to understand what probabilities were present and what market structure was telling me that price was going to push up and going to continue further than this structure point. I can use this as an example on how I can improve in the future. So in essence, I didn't miss out. I didn't lose out on money. You know, I can go back in time right now to when I was born and there's market data. So for 20 years, the markets have been going. If I was to think, oh, I missed out on this trade after only knowing about the markets for 3 years, you know, this is how you got to put it into perspective when you start having these irrational thoughts about, oh, I missed out on this trade for this one day, for this one trading day out of fuck knows how many in the year. But there's a lot. There's like 200 trading days, right? Every day has 2 good trading sessions, New York and London. Every week, right? Every week there's 10 quality trading sessions where you can look for an opportunity. Look, there's market data before I was even fucking born, okay? Look at this shit. And this is just on a Wanda. I know other pairs are going to go further back. 2002, 3 years before I was born. Alright? So to think, oh, I missed out on this opportunity. There's gonna be a lot more fucking opportunities, right? The markets are not going anywhere. So cool your tits, sit back, and just simply wait. But a lot of you motherfuckers cannot wait. It's a skill that you need to develop, being able to sit and patiently wait for your setups. If not, granted, you can day trade and scalp, but who wants to day trade and scalp, right? Swing trading is the best way to do it, all right? You see my results, you see other people's results, and I've just got such peace of mind, you know? Trading on the higher time frames, it really does have its benefits. You can have a life, you can travel, you can use multiple pairs, you don't have to spend a few hours a day just looking at one pair or looking at these sets of pairs. You're looking at daily and 4-hour candlesticks. Like these trades take a long time to set up, so you can clearly see when a potential trade is about to be ready. So you don't even have to look at the markets. You set your alerts at your area of interest, wait for price to get there. It gets there, you hop on the market, then you monitor it. It doesn't get there, you never hop on the markets, you carry on with your life. It's a beautiful way to trade. I highly advise it. And you can make a shit ton of money, bro, because there's a higher probability of these patterns playing out on the higher time frames. So if your worry is, oh yeah, but I won't be able to get as many trades, right? Less is more. And more of profits is more profits.